And also a discussion segment, the Central Bank of Nigeria announced some adjustments to the nation's cash handling framework, removing deposit limits and raising weekly withdrawal thresholds to 500,000 naira for individuals and 5 million naira for corporates, effective January 1st, 2026. The policy is aimed at reducing cash management costs, curbing security risk, improving compliance, monitoring, and enhancing transaction transparency, while ATM limits remain unchanged. The Apex Bank has this week also licensed 82 new bureau de change operators and confirmed that Nigeria's external reserves have climbed above $45 billion. Now, today we explore what these decisions signal for the economy, businesses, and Nigerians. Our guest is financial and policy analyst Farouk Abdullahi. It's a pleasure to have you on Business Express.
Thank you. It's always my pleasure.
Now, let's begin with the revised cash withdrawal policy. How significant is this shift? And what does it mean for individuals, SMEs, and large corporates?
Well, in terms of significance, I would say it's a right policy at the right time and in the right direction, given the issues around cash management, the issue around security challenges that we are facing, and also the issues around enhancing efficiency in terms of ensuring financial inclusion and financial penetration in the Nigerian economy or financial landscape. So it's really a good move in the right direction. Obviously, the Apex Monetary Authority is saddled with the responsibility of reviewing policies in terms of cash management and other related policies, and to best suit the material time at which the policies are being carried out or implemented. So the whole idea around the cash policy is to ensure that cash management is being carried out efficiently and effectively. As we can see, the global trend in terms of the utilization of cash in carrying out transactions is very minimal. The world has transitioned from cash-based economies to cashless economy, and I feel Nigeria is also high time we also look at towards that direction and adopt that as our trajectory. This would not only ensure that we are in tandem with global best practices, but equally it would ensure that there will be efficiency in the financial landscape. There would be also reduction in CIT, cost of cash in transit. It contributes a major chunk of cost on the sides of the Apex monetary authorities and on the side of the banks. Even businesses, I think managing cash also comes with a lot of burden, stress and all have you. So to put up a policy that would gradually transition Nigeria from the conventional use of cash to a cashless society, I think it's the right move in the right direction.
So what does this do to small businesses that need cash to run their day-to-day activities? With this limit, that means they don't go beyond this limit, or does it attract more cost to doing business for small and medium-scale enterprises?
Well, the whole idea is to discourage businesses from using cash to carry out their day-to-day transaction. But obviously, we know a huge part of the informal sector that relies on cash-based transactions obviously would find it a little bit of a new thing for them to acclimatize and acquaint themselves with this new development. But eventually, it's something that I feel going by it means that they would have to pay more if they are demanding cash in excess of, the cap that is being put up by the central bank. I think for corporate organizations, 5% over, the excess limit that is being stipulated, they would have to pay 5% on that. So which means that for them to utilize, to get access to cash from the financial system, they would have to pay 5% in excess. So as a sound business who is after making profit, mitigating excesses and risk and ensuring that there is efficiency, businesses will start looking at how they could, manage their costs by ensuring that they, transact seamlessly using online platforms. And I think that also would reduce would reduce a lot of stress in the in the sides of small businesses and whatnot. It would ensure that the market, the economy, is gradually shifting into the model of adopting digital platforms to effect transactions and whatnot. And it doesn't mean that they are not going to be deprived of depositing any amount within the banking system. There is no limit, there is no cap, there is no cost as to the amount of deposits they are going to put into the banking system. But as regards to withdrawing the cash, there is, it comes with cost, which means that by implication, they should work towards ensuring that they get used to the digital platforms.
Okay,
So
do you think regulations like this can actually change this Nigerian behavior of always insisting on cash? It has to be cash and all that.
yes, you see, policies are a gradual process, and there's always a timeline, for implementation and milestone, that would measure the achievement or the success of the implementations of policies. So obviously, if this kind of policy are being put out there and there is strict monitoring of it in terms of the implementation and all of that, I think Nigerians would gradually accept and embrace it. Just remember before we started, when the mobile phone came in, it was very alien to the Nigerian telecommunication system, but eventually when we feel that, it's something that we can live with and it's necessary and it's a global trend, gradually we get to embrace it. And today, even a child of 10 years or even less is using a mobile phone. So in the same direction, I think that is how Nigerians would gradually shift into, getting acquainted with utilizing digital payment platforms. And it is also important in curbing, insecurity, money laundering, and a lot of vices, economic and social vices.
Okay. Now some analysts argue that removing deposit limits reduces friction in the banking system, while others fear it may increase cash-based transactions. Where do you stand on this debate?
Well, I don't think it would. The whole idea is not for it to increase cash-based transaction, because it is not healthy, not only for the economy, but for businesses as well. Personally, I can't remember the last time I put cash on my pocket, because with my mobile phone, with my ATM card, I can seamlessly effect transactions. So if businesses are genuinely operating, in terms of fulfilling all righteousness and without anything to fear or anything, I think there is nothing to, bad about going digital in effecting payments and whatnot. So it's something that I think we should all embrace it. It's a good thing for Nigerians, individuals, SMEs, and also for the economy and the banking institution as a whole.
Now, let's talk about the policy on bureau de change operators. The CBN recently licensed 82 new BDCs. In your assessment, is this number sufficient to influence liquidity and stabilize the retail FX market, or do we still need broader BDC expansion?
Well, it is important to put the whole BDC's numbers into context in retrospect. What was the number prior to this development, where the number plunges down significantly? What was the number like? Prior to that, I think we have over 6,000 registered BDCs, during the embattled CBN governor. Many people have used that avenue to speculate in terms of, going into the BDC market, because as at that time the exchange rate wasn't unified. The margin, the arbitrage is huge, and people are exploiting, the economy by engaging into that activity without having any direct impact on our economy. So it is logical, that policies are being put up, to reduce the number of BDCs in operations. And this will strengthen also the bureau de change, operation, because the capital base requirement is also good, and also putting up a sound structure for BDCs to get license is something that I think is in the best interest, of the bureau de change market. So, frankly speaking, as to whether the number is sufficient or insufficient, it's something that I feel the number should increase slightly and a bit. By this, what I mean by that is that more people, more businesses should come in and fulfill righteousness and get license, and also the government should put a little bit of leniency in allowing people, to join the BDC operations, because at the heart of transactions, we rely on the international market, and the BDC's operators are doing, pretty well in ensuring that there is seamless cross-border transactions. So,
now talking about efficiency, how can the newly licensed BDCs operate differently now to avoid past challenges like we've seen rate distortions and round tripping?
Well, I think this question shouldn't be directed at BDCs alone. It should be directed at, the holistic development in the area of foreign exchange transactions, which I feel the government has put up also policies in that respect that mitigate, the recurrence of those round trippings and arbitrage and speculations within the market, just by the single policy, the wonderful policy that the president put up, which is the unification and liberalization of exchange rate. So this means that there's no any margin. It's no longer fancier as it used to be before. So the whole idea is mitigated by virtue of that. But to strengthen, the BDC activities and operations, it is what made the government put up, a structure that will ensure that those that are not only capable but are able and have, the financial muscles, to withstand such kind of businesses are being allowed to operate into the system, and some level of skills, some level of understanding of the market must be portrayed. So the requirements are very rigorous, they are very important, and they speak in favor of, having a well-refined, structured BDC operations within the country. So
another issue which I would like to pick your thought on is on this Nigeria's external reserve. We've seen that it has now surpassed the $45 billion. Have surpassed $45 billion. Now that's a positive milestone. What factors do you think contributed to that? And another thing is the Naira at the position where we need to be, because we're talking about 1,400 to a dollar. I think as much as we are getting this 45, the reserve is growing. We should begin to see it reflecting on the Naira.
Well,
or is it too early?
To address the first question, in terms of foreign reserve, this is attributed to nothing but the policy reforms that this administration put up, in terms of ensuring that there's a bit of, economic diversification where other sectors were able to pick up. And also, we would say the recent recalibration of our GDP also has given a true depiction. It has revealed the true depiction of our economic output, which obviously the GDP is a function of our, economic, output. So that has also captured other sectors of the economy that hasn't been captured in the previous methodology of our GDP estimation. So I think these are some of the little factors that has contributed, to the GDP figure rise that we are experiencing today, and we hope it keeps growing. And at the same time, also, if you look at the level of investment that is flowing into the country, it's relatively getting better. Because foreign portfolio investment also is always on the rise. And this is also kudos to, you know, the reforms that this administration is doing. And if you look at also our exchange rate is also another contributor of, you know, our stability in terms of GDP. And it is our hope that it keeps getting better, you know, and on records, on paper, it's doing fantastically well.
1,483 naira to a dollar. We can still do better, right?
Well, in terms of, you're speaking in terms of the nominal value of the exchange rate, but I'm looking at it from the context of, you know, stability in the foreign exchange market. You know, if today we operate on two exchange rates, let's say the central bank rate and the black market rate, you know, let's say the black market rate is pegged at 1,400 and, you know, the CBN rate is pegged at 300 naira, creating a huge arbitrage that creates problem in our economy, and that was a problem that we transitioned and migrated from. So in terms of stability, this policy has brought stability, you know, in the foreign exchange market. But the nominal value, you know, of our exchange rate is a function of our economic activities, you know, in terms of imports, exports, you know, and our productive capacity also, what our dollar earnings are like, and all of those things. So these are the things that would determine how it would look like. But what matters is to speak in terms of, you know, what the real economy is giving back to our economy.
Okay, thank you very much, Farouk Abdullahi. It's been a pleasure having you in the program.
Thank you. It's always my pleasure.
Now let's head to the currency market, where the naira weakened to 1,483 naira to a dollar as forex pressure persists. And look at the official